BHARAT Bond ETF by Edelweiss Mutual Fund. You can now invest in AAA rated public sector bonds with just 1,000 rupees.
Namaste, Sat Sri Akal and Adab. Welcome to this show, Bond with Mr. Bond for Edelweiss BHARAT Bond Fund, one-stop shop for all investment needs of an investor. Let me explain to you the product first. As we all are aware, there are two asset classes, equity and debt. Edelweiss BHARAT Bond Fund only invests in debt instruments and debt papers. It invests in AAA rated corporate bond funds. They have two options, 3-year option as well as a 10-year option. Investors who have a demat account can invest through exchange traded fund, and those who do not wish to do it through exchange traded funds can invest through the fund of fund structure through Edelweiss Mutual Fund directly. Now let me welcome the guest on our show, Mr. Rakesh Khanna, who is an advocate in Supreme Court. Welcome, Rakesh. What's the question on Edelweiss BHARAT Bond Fund which you want me to answer?
Thank you, Mr. Bond. I have been hearing a lot about some delays, downgrades and defaults as far as debt papers are concerned, and these are directly affecting the returns in debts. So my question is, why would I still want to invest in a debt mutual fund, and especially the Edelweiss BHARAT Bond?
Extremely valid question in the current debt market space, which has been plagued by delays, downgrades and defaults in the debt paper, especially since one of the major infrastructure company, finance company, defaulted in late 2018, and thereafter many corporates have followed suit on a similar path. Naturally, since there are downgrades and delays, the investors' returns definitely get affected as far as the debt space is concerned, and including in the credit risk space where most of the investors are invested.
So why are you only recommending Edelweiss BHARAT Bond for investment compared to the others in the market?
Sure. Now let me explain to you what Edelweiss BHARAT Bond Fund does. It invests in AAA rated public sector undertaking corporate bonds, which means it takes away two of the most important risks in debt investing, namely credit risk and liquidity risk. And both of these are very, very crucial as far as the investors and their returns are concerned. And since they are investing in a 3-year paper or a 10-year paper, they do a matching in terms of the residual maturity of the papers which they buy. So let's assume you are investing in the 10-year option. What the fund manager does is they will buy to start with a 10-year AAA PSU bond funds. After that, since it's an open-ended scheme, next year they will get fresh inflows. Those fresh inflows will be invested in the similar papers with 9 years in residual maturity, then 8 years in residual maturity, and so on and so forth. This in debt parlance is what we call constantly rolling down on maturity. And finally, the investors get the returns which are locked in at the time of investment. So if you hold it till its next maturity, which will be the 10 years in your case to start with, you will earn the returns which you have captured at the current juncture. So you're taking away, as I said, the credit risk as far as the investors are concerned, and that's what is plaguing the debt market space currently.
Well, thank you. That's very well explained, and a lot of encouragement to go for Edelweiss BHARAT Bond Fund. Thank you so much.
Thank you so much. This is your host and host signing off from this show, Bond with Mr. Bond for Edelweiss BHARAT Bond. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.